Well, welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. While traditional venture funds increase their fund size over time, corporate VCs should keep their fund size low. Traditional VCs seek higher compensation and can do so by increasing the size of the fund, which increases their management fee. Corporate VCs are often compensated as employees of the company with some upside on successful outcomes, which are not necessarily financial exits. Collaboration, partnerships, and pilots are the most often used metrics for funded companies in a corporate VC fund. Therefore, it is important to keep the costs low, especially at the start, and then grow it over time as you prove out the program. It will be easier to provide a positive return on investment for a $25 million fund rather than a $200 million fund. This will reduce the dollar investment into each startup, but there again, it's best to start small and increase the investment per company over time. A large fund may draw criticism from other departments in the corporation who want that budget for their purposes. A large fund can create a culture of contracted labor rather than a culture of collaboration. The final outcome is not a financial return, but successful collaborations and pilots. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start up into today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.